a lot of your problems like overtrading, FOMO, greed, over leveraging, over risking in general, all come down to the fact you don't have a solid trading plan. You don't have a real set of rules that you can follow. And the reason you don't have that is because you are lacking strategy. So today, I'm going to show you how to go about this, how to build a trading plan, how to go about that, and then how to implement it into the markets. So there are three components to every trading plan. You have risk management, you have your goals, and you have the strategy. The strategy is what you use to get into the market and execute. So we are going to start with goals. There are, again, three things here we need to pay attention to. So the first one is, how much do you want to make? So this could be completely up to you. This could be daily, monthly, weekly, quarterly, even yearly. You need to have some sort of number in mind. Now, the point of this isn't for you to sit there with a $50 account and say, I want to make $1 million next year in trading. That's not realistic. This needs to be something you can follow day by day. It's some benchmark you use to keep yourself on track. So let's say you have $1,000 in your trading account. Now, let's say you have $1,000 in your trading account and you want to make 3% per month. So this would be $90. You would make $90 on your account every single month. Now, what this does is keeps you accountable. So if you are, at the end of the month, you're a few days away from starting the next month, and you have, let's say you've made $100, you outperformed this benchmark, you can say, okay, I have outperformed my goal. I'm done for the month. I'm not going to touch it again. Or if you've done $20, you can say, okay, I'm a little bit further away from my goal. Is there a really good trade setup I can find without over risking? And this is a good way to just say, okay, I'm on track this month. I've beaten my target this month. I've underperformed this month. It's just a good way as that benchmark. Now, the next one is very similar, but this one is the percentage gain. So again, let's just hypothetically say you want to make 3% per month. That's, again, it's a very good result. It's a very solid result, and it's very achievable. Now, keep in mind, this isn't something you have to do every month. This is just an average. You can say, okay, I want to average 3% a month. So again, the same rule as the income. If you are over 3%, you can say, okay, I've beaten the goal. I've surpassed myself on average. I'm going to sit back and I'm just going to chill for the rest of the month. If you're underperforming, you can say, okay, I'm a little bit behind. What am I doing wrong? What can I do to reach that goal? Again, we're not talking about over trading. We are trying to enforce real trading discipline here. Now, the final goal, and this one is completely personal, so it's very difficult for me to sort of give you a blanket statement here, but this is your actual goal. What do you want trading to do for you? So it could be freedom, or it could be wealth. It could be, hedging against inflation. It could be anything, but this is what you have to decide, because obviously your goal from trading is also relating to your income in your average month. So for example, if you're just hedging inflation, you actually don't need to make that much at all. Whereas if you're starting with $1,000 and you want to be wealthy from trading, you have to come up with some sort of action plan on how to do that. So for example, let's say it is wealth. Okay, so I need to deposit, let's say $1,000 bi-monthly, so $500 a month, or however you want to do it. I need to do that for the next X years. I need to average 3% a month, and this is your plan. This is your almost like your Bible to your trading. Again, a trading plan goes deeper than, there's a support here. If I have a bullish candle, I'm going to buy. Your trading plan should encompass you as a person in your trading strategy, in your goals and your risk. It should all be about you personally. And this is why copying a lot of people isn't going to work. You can take ideas. You can say, okay, I like the way this person trades, but it's a bit too risky for me, or this person's really good, but I don't like that indicator, or whatever it may be. And you adapt it to you. And this is one of the reasons why so many people buy courses and just don't get anywhere, because they're trying to copy all these things from other people and their goals are just not the same. They're not aligned. Next, we'll go into risk management. Now, risk management's a little bit more simple to lay out, but it's a lot more complex than your goals, really. So you need to do your risk per trade. So, by standard, you would expect anywhere between 0.5 to 2% risk. That's somewhere that is healthy and it's manageable. But that also comes down to, how many trades do you place at one time? Let's put exposure. So let's say, you don't ever want to have more than 2 trades running. How's the correlation on those 2 trades? So again, let's go to let's just call it correlation. Do you want to only trade US dollar crosses? In that case, you're going to be very exposed to US dollar. See, again, you need to be able to say, okay, I really like these three trades, but this breaks my exposure rule. So I'm actually only going to pick two of them. What are the two best options out of the three? So again, this is where your risk per trade comes in. Because if you don't really have much of an exposure limit, so let's say you're happy to take 10 trades and you take 2% risk on all those trades, that's 20% of your equity that you've just put at risk. So really, the higher the exposure limit you have, the lower risk per trade you want to take. So again, if you had 10 trades open at 2% risk, you're risking 20% of your equity. Do you really want to do that? So if that's the case and you're very active and you're placing a lot of trades and they're all running at the same time, you might want to run something more like 0.25 to 0.5% risk. So again, this is something that you have to figure out for yourself. Then you've also got risk management in terms of what do you do when the trade's open? Do you trail your stop? How much do you trail it by? When do you trail it? So you could say, I'm going to trail it by 1%, every 1% profit. So if your trade runs into 1% profit, you move your stop to break even. If the trade runs to 2% profit, you run your stop down to 1%. So you've locked in that 1% profit and you give in that market 1% of your profit to run around with and then hopefully obviously continue to your profit target. So, or you could say no SL change. So obviously you don't change the trade once you placed it, and that's something I would actually suggest is the better idea, is to just let trades run, don't mess around with them too much. But again, you've got to back test all this stuff. You've got to work out what is the best fit for the way you trade, or for the way your brain works, because not everyone's brain are the same. You know, if you take someone that's very wealthy, someone that's very poor, and you give them the same type of account size, let's say $1,000, and the poor person hasn't ever had $1,000 in cash before, and the wealthy person trades normally with millions, you're likely going to see a much different approach to their risk methods. Then that brings us on to the next point of, let's say it's your R&R. Do you have a fixed R&R? Do you go for a minimum of 1 to 1? Do you go for a maximum of 1 to 2? How do you approach that? So once the trade, once you're looking at that entry and the stop loss, where do you put your take profit? Do you need to adjust that stop loss to meet the R&R requirements? Then we've got the next one here. We've got DD limit, so drawdown limit. So this kind of goes back in circle actually to your exposure. But if you have a huge drawdown limit, you're going to be in some trouble at some point when the markets start running against you and you've over risked on your trades and you've got lots of exposure. You're going to be in some serious drawdown. So you need to be able to say, okay, I have 5 trades on at once, or 0.5 risk each. If all 5 are in drawdown, I don't want all of that loss. So I'm actually going to cut some of the loss when my drawdown reaches. It could be 5% equity, or it could be 2% equity, or it could be whatever it is, whatever you're comfortable with. You set that limit, you do not break it. And this is what keeps you safe. This is called a safety net. So now let's move on to the actual strategy itself. So the first thing you need to decide is, what time frame do you want to trade? So let's go time frame. Let's just move that up slightly here. So we've got scalping. So scalping is actually very time heavy. So you need to decide, do I have hours a day to be able to sit and trade London session, New York session, Asia session, whatever it may be? Do I have that time in my personal life to do that? Or am I at work during that period? Am I sleeping during that period? Am I, doing whatever else? Do I have time to do that? Most people will say no, because they don't have that type of time to be able to, most people are at work or school, whatever it may be. So then you've got day trading. Day trading is pretty time heavy, not as much as scalping. So for example, if you do have work in the morning or whatever, you can spend some time looking at the market, say, okay, this one looks good for today, set the trade, go to work, come back from work and close the trade. So that's one way of doing that. Then you've got the other option, which is swing trading. Now this one is much more sort of average friendly, if you will. When I say average, I mean in terms of time. Most people can swing trade, because what you can do is you could do your analysis on Sunday, set some alerts and just place them through the week, rather than having to dedicate hours of time watching the markets, waiting for an entry. You can just quite literally set an alert, if it hits, take the trade, or even set a pending limit, and then you're in, and that's it. And you can hold that trade for the next 1, 2, 3 weeks and just let it run. Then the next one, which is position trading. Now, position trading isn't very average friendly. It's a lot easier to do in some aspects. So you can very easily sit in a position trade for months, even years, and almost treat it like an investment. But the problem is, with position trading, you have to be very keyed into the macroeconomics, because you're trading on sort of the weekly and monthly time frame. You are relying heavily on macro trends to prevail. Now, the other factor is you cannot really do position trading with low capital. You have to have a reasonably large sized account to be able to hold those positions through large, again, weekly, monthly timeframes. Through those fluctuations in the market, they will hit heavier. Even if you use a low position size, they will be more significant. So you have to have much larger capital to really be able to do this. So this leads us on to the next big factor, which is your entry. How do you enter the markets? Well, there's a few different ways. There's events. Now, event trading, again, this isn't something that you would really do as a beginner trader. This is more of a advanced strategy, I would say, because what you need to do is build an economic thesis. So you could say, I'm bearish on euro dollar because of XYZ. I'm going to wait for the next catalyst. So it could be NFP to come to the markets. I'm going to wait for that push to the upside, then I can go short. So using that news event as an entry into the market, which obviously beginners can do, but I wouldn't say it's the easiest way to trade for someone new. Now, obviously, you've got your technicals. So in technicals, this is obviously where you would use the market. You'd use candlesticks, patterns, indicators, whatever it may be, to actually get into the markets. So then you've got to decide, what do I like to do? Do I like indicators? If I do like indicators and I want to trade like that, which indicators do I use and what settings? So you could say, it could be an RSI. Let's just say, for example, with the same settings I use. So you could use 80 upper, 20 lower, and then a length of a length of 6. So again, it's completely up to you. However you want to trade, whatever works for you is fine. But you need to understand that that's what you do. That's your strategy, and you stick to it. So again, you could go into something else. You could say, I wait for SNR. So you could say engulfing candle. So you wait for that engulfing candlestick to prevail, and then that's when you take the trade. Or you could do something different. You could wait for a pattern. But then, of course, you need to say, okay, what pattern? Maybe it's maybe you trade wedges or something, whatever it may be. Again, I'm not judging you. This isn't a tutorial on how to trade or my strategy or anything. I'm teaching you how you need to approach a trading plan to be able to actually get the most from it, and not just say, oh, I like to enter at this point with that and that. And it's very loose and up for interpretation. A real trading plan, and obviously yours should be a lot more detailed than this. This is just sort of the boilerplate that you would use for an example. So please don't take this too literally. If you are going to copy this, make sure it's detailed, make sure it makes sense to you. And again, this is more of a boilerplate for you to be able to copy and just understand what I'm talking about. So events, we've already discussed events, so we'll leave that one there. Now, the next thing is macro. Do you trade macroeconomics? I would love to say I hope you all do, but I know for a fact if you're watching this video, you probably don't, which is a little bit unfortunate. But macro is a great thing, and I'm not going to go into that in this video. And the reason is because we discuss macro heavily in our Discord. If you want access to that for free, link is in the description. You can join it right now. No hassle, no fee, cancel anytime. So this is how our trading plan is looking so far, and even this isn't enough. So you could have more on this. So you could say, I want to write down how I do my analysis, for example. So you could do another box here, and let's just put this one as that. So we could say analysis, and then you could do, okay, I like to start on the 1 month, then go down to the 1 week, then go on the 1 day, and that's where I'll draw key levels. And then after that, I will go and do a lower time frame, and that's where I'll find entry points. You get what I'm saying. So you would then detail what your analysis process is, and you could say what days you do it. Again, if you're a swing trader, maybe this is every Saturday, maybe every Sunday, maybe it's even every Friday night. It could be anything, but you just need to document what you do. And this is something you would take this, then you could put it into Excel and essentially turn it into a checklist. You could say, okay, it's Sunday. Have I done my analysis? Do I find an entry? What are the entries at? And you would make a sort of a heat map. And maybe we could make a video on that in the future if there is some demand for that. But we'll leave it here for now because I think you should have the idea. But this is sort of it's the boilerplate. This is an example. Yours should encapsulate you, and it should be more detailed than this, and it should make sense to you. It doesn't matter if it looks good, it doesn't have to be pretty, it has to work, and that's the point. So then again, once you've got this done, you take it to Excel, you create a checklist, you make it very simple, very clean, very easy to understand, and very systematic, and that's what you follow. That is then your Bible into the markets. That's what you do. You don't change from it. You don't play with it unless you see a reason to play with it, and you know your strategy stops working, or you need to optimize whatever. That's fine. But day to day, do not mess around with it. You follow it, and that's it. And this is how you become profitable. This is a big, big step. And obviously, you would need to back test. It takes a lot more than this, but this is the blueprint. So, guys, I hope this has been some value to some people. I will see you very soon. Again, you can join the Discord 100% free for 7 days in the Discord. I will see you soon. Have a good one. Make sure to like and subscribe. Helps me out a lot. Thank you for watching.